Hi, this is Steve with Snap Projections here to provide an overview of the corporate planning functionality in the software. We're going to be finalizing a plan for Jane Snapper. I've already input all of her personal information. She has a non-registered investment account, a tax-free savings account, and an RRSP. She also owns her home and has no outstanding mortgage. She's looking to retire at age 65. She's currently 58, so we've got another few years of working before she retires with a target spending goal in retirement of $80,000. Now, the majority of her current assets and income are part of her corporation, which we're going to add to the projection and show you all of the capabilities that Snap has for planning for corporations. At the top of the planning page, I can click Add Corporation, and that's going to create the scenario setup flow for the new corporation. I'll call this Corporation XYZ. Within Snap Projections, you can model both an operating company and a holding company as one single corporation in the plan. This is the intended or preferred way to do so because it's going to integrate those two sides together. So if there's passive investment income of $50,000 or more, it's going to automatically adjust the small business deduction being applied on the operating business side of things. Also, any retained earnings that are left over each year from the operating business will automatically flow into the capital assets of the holding company. We're going to leave the small business deduction rates as the base assumption. We're also going to input a few existing notional account balances. So for the refundable dividend tax on hand, we'll enter in 50,000 of current non-eligible RDTOH. We're also going to update the capital dividend account balance to 25,000. Now, all of these values pre-fill as zero, and you can leave those as the starting point for your plans. You don't need these values in order to get started. By leaving them as zero, you're going to create a more conservative projection for your client. If you are interested in gathering this information from your client and or their accountant, you can click on Help in the top right corner, go to our Help Center. From the Start Here button, you're able to click on Financial Planning Questionnaire, and you'll see that we have both a short financial planning questionnaire that can be used for the majority of plans, or a long financial planning questionnaire if you want the additional corporate input details to be provided. So you can download this and use that in conversation with your client to gather the required information. As we continue down the corporate setup page, we have the ability to enter in their current GRIP, and we can structure their current ownership. We also have the ability to define how the corporation is going to be disposed of in the final estate. There are two options in Snap. You can use the winding up method, which is going to assume that all of the corporate assets are liquidated, any taxes are paid within the corporation, all debts are repaid or finalized, and then the remaining cash, including any insurance proceeds, are distributed to the estate through a combination of return of capital, capital dividends, eligible dividends, and non eligible dividends, all determined based off of the available notional account balances. The alternative would be to use the share sale method, which simply takes the net worth of the corporation in the final year of the plan and assumes that the corporate shares are sold for that value, and there would be a capital gain for the market value less the adjusted cost base of the shares input on this page. The winding up method is the default in Snap, and it's also the required method when using corporate insurance in the software. Share sale is an option if you want to simplify the tax calculation and just assume that the shares are going to be sold for a capital gain. I'll click next and we'll proceed through the scenario setup pages and add in some assets. So there's an investment balance currently worth 1.5 million with a cost base of 1.45 million. That's currently invested as 40% fixed income, 60% equity. We'll also add an existing property that's owned by the corporation that's worth 800,000, an original cost base of 650,000. And we're going to sell that the year after Jane retires. We'll click next and proceed to the debts page. We'll add a loan for the corporation of 250,000 with a 5% interest rate and a $4,000 monthly payment. And we'll click next in order to proceed to the insurance page. We'll add an insurance policy. Set that as a whole life policy. Select Jane as the insured individual. And when we click on the edit button under death benefit, we're going to get the policy input table. And the great thing is that you can simply copy and paste values from either a spreadsheet or your insurance quote provider directly into the software. So if I copy that outside of Snap, I can click on the first field and simply paste in the values for the policy. You can do that all at once if you have the data formatted in that way, or you can do it column by column. So now we've input the information for the insurance policy, and this includes death benefit, cash surrender value, the adjusted cost base, and the annual premium. And with that, we've input the main information for our corporate setup. So we'll click on planning pages and see how that's been reflected in the software. We have the investment account balance that started at 1.5 million. The software is making a $112,000 withdrawal, and that's to cover the debt payment of 48,000, the premium for the insurance of 50,000, and the investment tax of 14,770. We're now going to add in the operating business side of things. So she's currently earning 300,000 a year and expects that that will increase with inflation until age 64. She's paying herself a salary of 110,000 per year, and we'll do that until she retires. And she has other expenses of 20,000 per year. We'll continue until she retires. So we've now input the operating side of things. We can see here it's flagged as active business income. So this is going to be taxed appropriately for the small business deduction rate. We can see over here we have more of the passive options that is going to be taxed at the full marginal brackets. I'll click Run Corporation. And now we can see that instead of making withdrawals from the investment account, there's a deposit being made for the retained earnings from all of the activity going on. So the net business income of 170,000 is being taxed at the small business deduction rate. We're then paying the debt, premium, and any investment income taxes, and then we're depositing the excess into the investment holding account. And that account continues to grow and receive deposits until Jane retires. Then we can see that we're selling the property, which gets deposited into the investment account. We can see that there's a spike in taxable income that year because of the capital gain on the property. And then we can see that from that point forward, Snap continues to automatically withdraw the required amount in order to pay any premiums and any taxes each year of the plan. From the right, I can go to the year that Jane turns 65 and enter in her expected dividends. So she's going to pay herself $70,000 per year all the way throughout the projection and index that for inflation over time. I'll click Run Corporation to apply that change, and then Snap will recalculate all of the numbers throughout the software. So now we can see Snap is taking out a bit more money each year in order to fund the dividend. As we continue down the page, we can see that there's still quite a bit of money left over in the corporation at the end of the plan. We have other options within Snap. You can pay an eligible dividend and a capital dividend. These are both controlled by the available notional balances in the software. So Snap automatically calculates and tracks the GRIP available for eligible dividend payments, and it calculates the capital dividend account. We can see those balances from the top right corner of the software by clicking on the blue box. So you can see the GRIP and CDA balance each year of the plan, and those are projected to continue to increase as we're not currently using either of them up. I can go back to scenario setup into the corporation section, and then under capital dividend account, there's the option to automatically pay dividends each time the capital dividend account reaches a certain threshold. So in this case, I'm going to enter 100,000. I'm going to clear any previous capital dividends that had been entered in the plan. And now we can see in the capital dividend column, Snap is automatically paying out a capital dividend each time that the balance reaches 100,000 or more. We still have roughly 1.5 million left in the final year of the, $1.5 million policy, death benefit, and then $2 million left in the investment account. When I click on Jane in the top left, we're going to go to her personal page and see how all of this is reflected now that we've set up the corporation. We see that the salary has been added, which is then calculating how much Jane would have available for spending in the current years. We see the non-eligible and capital dividends coming into her personal side, now funding her retirement spending. In the years where she's receiving a lump sum capital dividend, we have that being automatically allocated to the tax-free savings account up to her available contribution room, and then into the non-registered investment account. And that happens each time that there's a lump sum capital dividend. Then we scroll to the bottom and see that she'd have roughly 2.5 million left on her personal side in addition to the corporate assets in the plan. If I go to the top right, I can click on charts and see how all of this information comes together. We have the purple value, which is the corporation throughout the projection. We also have her home and all of her liquid personal assets. We can see that her ultimate net worth ends up at about $7 million in the final year of the plan. We can also see that her target spending is fully funded all throughout the projection. And we can see the cash flow that's coming into her personal side, including the non-eligible dividends and the capital dividends from the corporation. Going back to the corporation for a moment, if we scroll to the right, we can see information about the net worth and the estate after tax. The net worth value is simply the total assets of the corporation less any debts. This assumes that the client is still alive and gives us a sense of what the corporation is expected to be worth each year of the projection. The after tax estate value assumes that Jane has passed away and includes the death benefit from the insurance policy. If we scroll to the final year of the plan, click on the $3.5 million figure, we can see how these calculations are determined and how the corporation is assumed to be disposed of in death. We have capital assets of 2 million. We have the insurance cash surrender value of 1.1 million, which arrives at a net worth for the corporation of 3.1 million. That's assumed to be liquidated, and there would be 95,000 in taxes payable on any capital gains. We have a expected refund from distributions that we'll make out of the corporation of 77,000. That brings us to a market value of 3.1 million. We remove the cash surrender value since we're not actually receiving that in the event of death. We add in the insurance proceeds, and that shows how much cash would be available for distribution from the corporation to the final estate. And then Snap determines that that will be paid as 1.8 million in capital dividends, 600,000 in eligible dividends, and then 1 million in non-eligible dividends. When we go to Jane's personal page, we can scroll to the right-hand side to the estate before tax column, go all the way to the bottom, and we can see the corporate cash value that's available to the estate. If we hover our mouse, we can see how that's being distributed, same numbers that we just had on the corporation, and then we can see the taxes payable by the estate on that distribution. So that's an overview of the corporate functionality in Snap. If you have any questions, you can learn more from a lot of help articles and our recent webinar. If you click on Help and then Help Center, we have a dedicated section to corporations and businesses that outlines things like the corporate owned life insurance, the disposition on death. And we also have a recent webinar where we went in depth on how to use corporate life insurance and how to compare different investment strategies in Snap. If you have further questions, you can give us a call or send us an email directly, and we're always happy to help. Thanks so much for checking out the software, and let us know how we can help.